Ladies and gentlemen, good morning. 3 brief reminders before I turn it over to the Director General. Keep in mind, please, that the embargo on this press release is in effect until 12 noon. Secondly, when using the microphones to pose your question, please turn it off after it's been asked. Otherwise, these cameras will lock onto you into perpetuity. We will have 30 minutes with Director General Azevedo. After he leaves, Bob Koopman, Coleman Nee, Antonella, and Alejandra will be here to answer your technical questions. Let me introduce the panel. Director General Azevedo, of course, Bob Koopman, our Chief Economist, Coleman Nee, who's the economist with principal responsibility for the report, and Antonella Liberatori and Alejandra Bajarras to my right and left, respectively. Director General Azevedo, the floor is yours.
Well, thank you, Keith. Well, welcome, everyone. Good morning. You have all just seen, I suppose, the press release, so I'll just say a few brief words and then open the floor for questions. For clarity, all the figures I mentioned in terms of trade expansion will be in volume terms, unless I specify otherwise. So in 2017, trade growth stood at 4.6%, and at that point, we were pretty optimistic that there was renewed dynamism and momentum in global trade. But since then, leading indicators have shown that momentum is weakening, particularly towards the end of last year. Now, forecasters have been revising their numbers, and our release today now confirm that growth is slowing. Trade underperformed last year in 2018 with growth of 3%. So again, 2017 was 4.6, 2018 it was 3%, and we expect for this year, 2019, even more modest growth at just 2.6%. Now, there is potential for a slight improvement in 2020, but that is very much dependent on an easing of the trade tensions over this period. And this, I think, is the key point. The fact that we don't have great news today should surprise no one who has been reading the papers over the last 12 months. Of course, there are other elements at play, but rising trade tensions are the major factor to the stories today. Over the last year, we have seen a range of new tariffs put in place, affecting widely traded goods. Trade simply cannot play its full role in driving GDP growth when levels of uncertainty are so high. Greater uncertainty means definitely lower investment and consumption. Investment in particular has a quite pronounced impact on trade, and this is reflected in the numbers. Now, we outlined these downside risks in our previous forecasts. We all need trade to play its positive role in supporting jobs, growth, and development around the world, and we need the rules-based trading system to play its full role in facilitating trade flows and providing stability in international economic relations. Now, it is therefore urgent that we resolve tensions and focus on charting a positive path forward for global trade, which responds to the real challenges in today's economies. So WTO members are working on this. They are bringing a range of issues to the table, and they are discussing ways to strengthen and to safeguard the trading system. This is very welcome. We are seeing real momentum in some of these discussions. But today's release simply reflects the realities of global trade today. Our job is to try to change those realities. So that is what I wanted to say. Before we open for questions, I would just mention that there is a lot of useful information in this release that we don't have time to go into now. So I encourage you to dig further into the figures. Our economists here at the table are here precisely for that. For example, and I'll give you just one on services. In value terms, we saw growth of 8% globally in 2018. And that is interesting because, as we have been saying, services is the future of the economy. This is where we're moving. And the fact that growth there is quite strong is a positive thing to focus on. This number, the 8%, was driven largely by strong import growth in Asia. Significantly, China saw a 12% growth in imports of commercial services. On the ratio of trade growth and GDP growth, and this is something that people have been focusing quite significantly over the recent past, we expect 2019 to be a ratio of 1:1. And this could pick up slightly in 2020, and this will depend a lot on the composition of GDP growth, both in terms of geography, so where growth happens, but also in terms of the factors that are driving that growth, because our estimate is that economic growth in 2020 will be at the same level as 2019. So our expectation is that over time, the ratio will return to the long-run average of 1.4 to 1, and this is the long term. But again, this is dependent on some of the big political factors that I have touched on already. For example, continued uncertainty would continue to lower investment. And if you lower investment, you will depress trade figures because they have a pretty significant impact on the ratio. So please take some time to read the release in full. Thank you very much for being here. I'd be happy now to take some questions if you have them.
First question for Jamil, followed by Bryce. Jamil, you have the floor.
Yes, Mr. Azevedo. Two quick questions. When you talk about tensions, what are the sources of these tensions? Who are responsible for these tensions? And secondly, on Brazil, over the years we have seen Brazil falling in this ranking. Again this year, another fall despite a growth that is, let's say, average. What needs to happen in Brazil for it to return to perhaps another position? Thank you.
Well, as far as the sources are concerned, I think it's pretty obvious that the tensions between the United States and China play a big role. If we look at the G20 monitoring report that was issued in November of last year, we see that the trade restrictive measures imposed by G20 members amounted to $481 billion. The coverage between the U.S. and China alone would probably be around 300 billion of that, 350 billion, sorry, of that 481. So it is a pretty significant component, but it's not only there. These things have a demonstrative effect. Other members begin to adopt restrictive measures even to protect themselves from trade deviation and things of the kind. So that is not contained between two members only, two countries only. It does affect the whole trade scenario globally. Now, that number that I mentioned, 481 billion, was 6 times larger than the previous period. So it's a pretty significant increase in terms of trade restrictive measures that we saw happening by the end of last year, and that is going to have an effect on both global economic growth and trade expansion. As far as Brazil is concerned, I wouldn't have the details for that. We do provide some numbers in the report that is published in Portuguese, I think, with some indication about the numbers for Brazil specifically. I think the obvious element for more participation of Brazil in the global trade scenario is more integration into the global economy, is having a more open economy, having Brazilian businesses thinking globally and not nationally only. Brazil has a very big market, and that's very tempting, but the global market is even bigger. And I suppose that could be the target, should be the target for companies established in Brazil.
Bryce, please.
Thank you for your comments. I wanted to ask you two questions. What would be the impact if President Donald Trump imposes tariffs on cars and car parts? And what would be the economic impact of a hard Brexit where the UK leaves the European Union without an agreement? Thank you.
I cannot quantify that, obviously, but as far as additional measures in terms of restriction on auto parts and automobile trade will definitely contribute to the increase in tensions and therefore increase in uncertainties. And I already said what uncertainties cause. As far as, what was the part? The other, first was autos and the other one was?
The second question was
Well, hard Brexit, yeah. Well, I don't know. Really, we have seen estimates made by the UK government itself. And I think they're better placed to establish what kind of impact it would have on the UK economy. What we do know is that any kind of hard Brexit would have its foremost impact on the relations between the two sides. More than half of the UK's exports go to the EU. A lot of the import, about half, I think, the imports come from the EU. So the conditions of trade between the two countries are going to be affected quite significantly, I would expect. But the exact measure of that in global economic terms is difficult to tell. Also because we don't know what the future relationship between the two sides is going to be. And we are not right now speculating too much about that. Let's see what happens, and then we'll make the calculations when the time comes.
Okay, over here, the two ladies in series, please, CCTV.
Thank you. I'm Xing from Xinhua News Agency from China. Good morning, Director General. We observed lately positive signals on the ongoing U.S.-China trade negotiations, and both sides are reported to be in the final stage of completing a trade deal. So what's your expectations from the progress made on the U.S.-China trade talks? How may the future of the global trade growth be affected by the results of these trade talks? Thank you.
Well, definitely hoping that we will hear good news from those conversations. I am not privy to the ongoings of the negotiations, so I don't know exactly what will be the outcome or what could be the outcome of those conversations. What I do hope is that whatever the outcome is, that it will help to lower the tensions and reduce the amount of trade barriers that we see out there today. And I suppose that's the effect that we're all hoping, that we're all looking for, because it will diminish the tensions and it will diminish the uncertainty for global markets. But I, like all of you, am reading the press and getting information that seems to be in the direction of a positive outcome. But I don't have anything to add to what is already out there.
Yep, you have the floor.
¿Puedo hacer la pregunta en español, ya que hay...
May I speak in Spanish? Thank you. Gabriela Sotomayor, Mexico Proceso. What are the prospects of growth for Mexico, according to you and your analysis? And speaking of the trade war between China and the US, do you think there could be a winner in such a type of war, or who the loser would be?
I will answer in English if that's okay. Yeah. So as far as perspectives for growth in Mexico, I don't have the specific figures for Mexico. Maybe the economists can help with that after I leave. I'm not sure what they have, but they will be happy to dig into what they do actually have. As far as winners and losers in trade friction, I don't think that something as widespread as we see out there today, there will be a winner or there will be a loser. There will be many losers, and I would suppose the whole world loses. To the extent that we see global economic growth slowing down, everybody loses. So there may be sectoral winners, somebody here in this sector or that sector that is a little bit better off, but the net effect for the economy, for consumers, for citizens, and for the global community is negative across the board.
Ram, you have the floor, please.
Yes, Director General, this is Ram Etwaria from Le Temps newspaper. You, as Director General, I suppose you have been meeting authorities in Beijing and in Washington. Is there any kind of input you have been putting into solving these trade tensions?
I have been talking to both sides. There are a number of elements that they are discussing that could have some degree of treatment here in the WTO as well. But at this point in time, I think our efforts have been to be available to help both sides at any point in time. We have been encouraging both sides to find an understanding and to make sure that they show as much political disposition as possible to come to an agreement. But more specifically, I think the whole of the conversations and negotiations are between the two sides. So the WTO is not interfering with that. The two sides are negotiating directly, intensely, and like I said before, I hope that they will come to a positive conclusion.
Tom Miles, please.
Good morning. Could this year potentially be worse than last year in terms of the global trade war? And could you actually see a global trade recession with trade shrinking? And if I can have a second question, do you see a risk that the WTO is being crippled just as it is needed to stop protectionism?
I couldn't take note of all the specific details, but as for 2019 being worse than 2018, I think we are right there. That's exactly what it is. I think our numbers show that trade is slowing down. Our WTO trade indicator that was published, when was that? February, so about a month and a half ago, shows that we are below trend. So whatever we had predicted before, so the baseline, we are probably going to see numbers which are below the baseline. And that number was the lowest for the last 9 years. So the last time we had a number that low was in March 2010. So we are not in good shape at this point in time. If trade tensions continue to increase, we could see an even more significant dampening effect on the global economy and trade expansion. So let's all work to avoid that. How much, what the impact is going to be, that depends a lot on the evolution of the trade tensions, more than anything else, but also on other things like monetary and fiscal policy. Those things are difficult to quantify at this point in time. As to the WTO being crippled, I think it's precisely in moments like this of great tensions and uncertainties when the system is most needed. But it's also the moment when it's mostly under pressure. It's under pressure because in situations like this, international cooperation is not the obvious way to go. In situations of crisis, countries tend to first try to go on their own, and then, as a second option, try to resolve things by collaborating with others. When that happens, of course, the system is under stress, and we are seeing a lot of that stress materializing in terms of affecting the work of the organization, particularly in the area of dispute settlement, where the blockage of the appellate body nominations is a very significant negative factor to our work. It's not paralyzing yet the work of the dispute settlement system, but it could have very damaging effects if we don't resolve it in the near future.
So we have, I'll take one more question here, then we have two questions that have come in from journalists who are listening around Europe. Please, you have the floor.
Angela from Sina.com, China. You just mentioned the ratio between trade growth and GDP growth, and what do you think would be the ideal ratio in 2019 and 2020? And also, if countries are all focusing on the domestic demand, such as what we are doing in China, do you think there is a possibility that maybe the ideal ratio will never show up, or will take a longer time for the ratio to come back to the historical high? Thank you.
Well, the historical high, if we are talking about the historical high of about 2-to-1 ratio, which was actually before the crisis, I think it's very unlikely that we're going to get back there, because that was a moment when you had the emerging economies growing at unprecedented rates and a lot of consumption and a lot of trade and the expansion of the global value chains happening at the same time. So it was a combination of positive factors that led to that very high ratio of about 2-to-1. We are hopeful that we can go back to the historic ratio, and the historic ratio is around 1.4-to-1. If we are going back in that direction like we were in 2017, I think we would be seeing healthy numbers for the global economy. But that's not the reality. The reality today is, because of the trade tensions, we are seeing the ratio go down again to 1-to-1, which is underperformance as far as we understand it. Domestic demand doesn't necessarily hurt trade. It doesn't necessarily hurt the ratio. Domestic demand, in fact, is one of the elements that allow for trade growth and, economic growth and trade growth. When you have a more investment-led kind of economic growth in countries like China, of course, that has a larger impact on trade in a positive way than merely domestic consumption. But domestic consumption is also an important factor in driving the economy and in driving trade expansion as well, only with a lower multiplier, I would say. But it's still positive. It's not a negative factor at all. But I will let the economists get into that when I leave the room.
Okay, DG, we have two questions that have come in by text. One is from Richard Io of Les Echos, and the question is, do you notice any shortenings of global value chains due to some production relocation near consumer markets, and this may explain less trade growth? You want the second one?
Let me get that one.
Okay.
So on this, again, I will let the economists get into that, but my initial take on that is that all the simulations and all the studies that we have conducted, they don't show that global value chains are contracting. They are maturing. In other words, we had global value chains growing and expanding for the recent past. That number is going up. It's not going to go up forever. At some point, that curve is going to stabilize a little bit more. I think we're getting closer to that plateau where growth of the global value chains is going to be slower than it usually was. But I wouldn't say that at this point in time you see a contraction. So global value chains actually diminishing. They're just growing slower than they were growing before. And that, I think, answers the question. What is the next one?
Second one is from Julia Wackett from Börsen Zeitung, And the question is, could you please comment on the progress of WTO reform? How do you rate the progress of the member states so far, and what more needs to be done?
Well, a lot needs to be done. We're still in the beginning, in the early stages of reform. I think reform has always been our objective. We started reforming even when we struck the trade facilitation agreement that was already reforming the rule book. And then we had other outcomes, including the elimination of export agricultural subsidies, expansion of the ITA, reform of the government procurement agreement. So there were a number of small reforms. I think we're talking now about something bigger. What reform is going to be is in the hands of the members. They're the ones who are going to decide where the priorities are and where they want to go. At this point in time, I would say that there are three main areas where I see efforts of reform ongoing. And by the way, reform is not going to be a package. That's important that people understand. Members are not inclined to spend a lot of time negotiating what a package of reform would be. They are going to reform where it shows promise and will deliver when things mature. But they are concentrating efforts in three main areas. I think the first one is dispute settlement. For obvious reasons, there is a lot of pressure under the system, and they need to take a look at how it needs to be updated. The second area is the work of the regular bodies of the WTO, and there is right now a lot of focus on monitoring, notifications, and that's something that is just part of the work of the regular bodies, but it's mostly in there. And the third area, I think it's the negotiating function of the WTO. They are trying to speed up some multilateral negotiations. I think the clearest example of that is the fishery subsidies negotiations, but also they are discussing other issues with the chairs of the negotiating groups, in particular agriculture, where there is a lot to be done still. But they are also talking and discussing other areas that were not on the table before, particularly on the joint initiatives that were launched in Buenos Aires. And these are, again, I think in the early stages. Where this is going, how this is going to go, it will depend on the dynamics that the members put in these efforts.
Thank you very much, Director General. We will now take our leave. I will ask Dan to come and sit in, and questions that you may have pertaining to elements of the report that are a more technical nature, Bob and Coleman and their colleagues can help you with that. Thank you very much.